All right, welcome to video number 2. All right, Jake wants to rent a townhome in downtown for $1,300 a month. His monthly gross income is $5,000. All right, so what percent of his income? All right, so simply I'm just going to take 1350 and divide that by 5750. There you go. Typical monthly budget is based off of a person's monthly income. What ideal percentage? That's 25%. Most financial people and bank people will tell you 25% of your take-home pay is what you need to concentrate on. For the month of January, Al spent $190 on gasoline. All right, so what we're doing is trying to find his percentage. So I'm going to take all my money from this problem and divide it by his monthly pay. So that means 190, 70, 110, 300, so on and so forth. All right, just divide that by 3,750. Get your percentage. All right, previous balance on a credit card statement. If you remember, starting with $20, you are going to subtract the payments, add the purchases, add the late charge, add the finance charge, and it will equal, the new balance, the minimum payment you do not focus on. All right, so it's just an algebra problem. Jessica's financial advisor believes that she should be saving 15% of her gross monthly income. She is. All right, so if you remember, in this particular problem, 15% of her income is equal to 305. What we don't know is, what is 100% equal to? That should actually kind of be a percentage. There it is. So we don't know what this equals. I told you in class, hey, make a proportion. 305 over 15 is equal to x over 100. Cross multiply and solve. Now, when you solve, this will be her monthly income, which is $2,033. But converting it to, I separated these two questions. But what is her annual income? We'll just take it times it by 12. Tony's fixed costs are this and this. So even though it's fixed and variable, he's still having to pay it. So take how much money he has to pay and divide it by the total amount of miles. There you go. All right. So Sarah found the car she likes on the car lot. Base price is $45,000, and she's going to get $3,500 in extra. So that plus that's what is called a sticker price. So let's see, that is $48,500. I'm going to take this number and I'm going to times it by 0.07. When I do that, I'm going to get the tax in which I have to pay. So if you want to do this kind of line by line, it'd be $48,500 plus the tax plus the dock fee plus the title fee. Remember, because the dock fee and title fee do not get multiplied by the tax. Luke's monthly net expenses, okay? What I did was I took 1,050 and I multiplied them by each percentage of the category's percentage. Now, I then took all my totals here, or all my expenses, and I just added them up to get 1,736. Now, how much will he be able to put in savings? Well, he is bringing home $1,950. He is spending $1,736. So he'll save whatever's left over, and that's how you get $214. Matching. There you go. Moving on. Jennifer's annual car insurance premium is $1,080. This is how much she pays a year. How much she pays a year is $1,080. Now she's got to pay this, or not pay it, but she's got to pay this yearly, monthly. So I'm going to take this, I'm going to divide it by 12, and I'm going to get how much money she has to pay. But there's a $2 surcharge, which is basically a processing fee. So I'm just going to add $2 to that. There you go. Sarah's credit card statement. All right. All right, so find the average daily balance. Well, if you remember, 9 days times 150, I get a number. 15 days times 362 equals another number, and then 6 days times 503 equals another number. I take all these numbers, add them together, and divide it by 30. The reason I divide by 30 is, let me erase this a little bit so you can see. 9, 15, and 6 all add up to get to 30. If it added up to get to 31, I divide by 31. What is the sum of all the payments? Well, it's right here in the transaction history, which is all right here. Payments, oh, there it is, 1,500. Next, what is the sum of all the purchases? Well, that's a purchase, that's a purchase, that's a purchase, that, and that. Add it all up. Using the APR, find the MPR. Well, the APR is 48. Now remember, APR is annual percentage rate. MPR is monthly. So annual to monthly, I just divide by 12. Using the average day of the balance and the MPR, find the finance charge. All right, well, the finance charge, if you remember, is, clean that up a little bit, the average day of the balance times the MPR. Now remember, of course, it would be 0.04 when you do the multiplication, so don't make that mistake. Lastly, second to last, what is the new balance of the credit card? Well, here is the new balance line, or the area in which you go for it. Now remember, minimum payment, we don't do. All right, so that's where we're going with this. Let me kind of take away that. So, all right, so starting with the previous balance minus plus equals new balance. Remember, cross that out. You don't need minimum payment. How much available credit is left? Well, look at the total credit line, which is right there. I can't remember the person's name. Sarah. Sarah can put $10,000 on her credit card if she wants to. She already has $103.06 that's on the credit card. So how much more can she spend? Well, just find the difference between 103 and 10,000. That's it. All right. So now it's time to figure out insurance. Now, if you remember, these first three numbers, 75 represents how much money a person or the insurance will pay for someone's injury. So like look at person A. They only needed 35,000. Well, 35,000 is much less than 75, so the insurance is going to pay all of the 35,000. Now remember, this is the running total. This is how much the insurance has paid. The insurance, and that's the second number, will not pay more than 200,000 for anybody's medical injuries. All right, so this is a running total. Hopefully you remember this when we're going through it. If not, go to a video and you'll see it. Now notice person B. Person B needs 93, so that person got hurt pretty bad. The insurance is only going to pay 75 bucks. Oh, I'm sorry, 75,000. Sorry, these are all in thousands. Which means Tommy's got to pay the difference. Well, at this point, the insurance has paid $110. I'm going to get this right, 110,000, because you get 110 by adding up how much they've already paid. Now look at C. C needed $52,000 in damage or in medical bills, whatever. That's below 75,000, so insurance is going to pay all of that. So when you add this up, notice the insurance has paid so far 162. Well, the magic number is 200,000. So that means the insurance goes, hey, I'm only going to pay 38,000 left, and then after that, Tommy, you're going to pay, because the difference between 162 and 200 is 38,000. So D needs 60 grand. Now, granted, 60,000 is less than 75, but the insurance will not pay over 200. So that means the insurance will top out after it pays 38 grand, which means Tommy's got to pay the difference. So after this point, after victim D, everything else the insurance is not going to pay, and Tommy's got to pick up the tab. Now, Tommy got hurt himself, but what makes Tommy special is the fact that he was a driver. If you remember, going back up to your directions, the driver is covered under an additional 50,000 PIP. So that means if it's under 50,000, insurance will pay more. Oh, I'm sorry, insurance will pay that. So Tommy only needed 49,000, so that means he's getting 49. So when I total everything, insurance pays for everybody $249,000. 200 from, now remember, 200,000 from person A through G, and then plus 49 because of Tommy. All right, and then Tommy pays 99,000. So let's answer some questions. How much did the insurance company pay? Well, 249,000. How much would Tommy have to pay for all the medical costs? Well, that's 99,000. How much damage will the insurance pay for all the property damage? Now remember, property is other people's stuff. Look at the directions. And let me clean this up a little bit just so we're not looking at a whole bunch of scratch here. Different color too. $75,000 is how much was damaged. But 11,000 of that was Tommy's car. So off to the side here, let's see, 75,000 was everybody's damage. But I have to subtract Tommy's car out because Tommy's car is not technically property damage in the insurance world. So that leaves $64,000. So all the other people's stuff totaled $64,000. Well, if you go back, hopefully you can see where I'm doing this. See where I'm circling 60? That's how much the insurance will pay. The insurance will pay up to 60 grand. Anything above that, guess what? Tommy's paying. So 64,000 has to be paid. Guess what? 60,000 of that is what the insurance will pay, which means the additional 4,000 is what Tommy's got to pay. Now, how much, question number 17, how much would Tommy have to pay to get his own car fixed? So now we bring back Tommy's car, $11,000. Big money here. Now, it says in the directions that Tommy has a $1,000 deductible. That means Tommy's got to pay the first $1,000. So the first $1,000 goes to Tommy, which means he's got to pay for it. And then whatever's left, so let's say 11,000 minus the deductible, that gives me 10,000. That's how much money the insurance company will have to pay to get Tommy's car fixed. There you go. All right, and I believe that concludes part 1 of the final exam review. I will start a new video with part 2. Thank you for watching.